Look, something shifted. And if you weren't paying attention, you didn't need a headline to tell you that. The signal was already there, quietly forming beneath the surface, long before the noise reached everyone else. Markets don't panic randomly. They don't suddenly wake up and decide to move together for no reason. When gold, silver, and oil all start rising at the same time, that's not coincidence. That's coordination. That's capital moving with intent. That's informed money positioning before the rest of the world even realizes what's happening. Yesterday, most people were still comfortable. News cycles were slow, narratives were controlled, and everything looked normal on the surface. But underneath that calm, something else was happening. Gold started climbing. Silver followed. Oil didn't lag behind. 3 completely different assets, all moving in lockstep. That's rare. That's not something you ignore. That's the kind of movement that tells you risk is being repriced in real time. And here's the part most people miss. Markets don't react to events, they anticipate them. By the time a headline hits your screen, the positioning has already happened. The money has already moved. The opportunity is already gone for those who wait for confirmation. That's the difference between reacting and understanding. As the hours passed, that quiet signal started getting louder. Physical gold began trading at premiums in different parts of the world. Not small premiums either. Meaningful gaps between what people were willing to pay for actual metal versus what paper markets were pricing. That divergence matters, because when physical and paper disconnect, it tells you trust is shifting. It tells you that somewhere in the system, confidence is starting to crack. Silver began showing similar behavior. Inventory movements, tightening supply signals, rising lease rates. These are not things the average person watches, but they matter. They matter because they reveal stress. Not visible stress, not headline stress. Structural stress, the kind that builds quietly until it can't be ignored anymore. At the same time, oil started reacting. And oil doesn't move without reason. Oil is tied to logistics, supply chains, geopolitics, and global stability. When oil starts pricing higher alongside precious metals, it's not just inflation, it's fear, it's uncertainty. It's the market asking a question it doesn't yet have an answer to. And then something even more interesting happened. While physical assets were rising, crypto didn't follow. It dropped hard. This is where narratives break down. For years, people have called Bitcoin digital gold, a safe haven, a hedge against chaos. But when real pressure shows up, behavior tells the truth. And the truth is, in moments of uncertainty, liquidity runs toward what's been trusted for thousands of years, not what's been around for a decade. That divergence matters more than most people realize, because it shows you what the market truly believes, not what it says. As all of this unfolded, most people were still waiting for confirmation, waiting for clarity, waiting for someone to tell them what was happening. But markets don't wait, they move, and by the time clarity arrives, price has already adjusted. This is where understanding structure becomes everything. Because what we're seeing isn't just random volatility, it's multiple forces activating at the same time. Safe haven demand, supply concerns, monetary uncertainty, strategic positioning. These aren't isolated factors, they reinforce each other, and when they align, movement accelerates. Gold isn't just rising because of fear. It's rising because of allocation shifts. Central banks have been accumulating. Institutional portfolios remain underexposed. Retail still barely participates. That imbalance creates potential. And when stress enters the system, that potential gets activated. Silver sits in an even more interesting position. It's both a monetary metal and an industrial one. That means it benefits from 2 completely different demand streams. And when supply tightens while demand remains steady or increases, pressure builds, slowly at first, then all at once. Oil completes the picture, because without energy, nothing moves. Not goods, not economies, not systems. When oil reacts, it amplifies everything else. It feeds into inflation. It pressures currencies. It changes policy decisions. It forces reactions. Now step back and look at the full picture. 3 major asset classes moving together, physical premiums expanding, paper markets struggling to keep up, alternative assets diverging. This isn't noise, this is structure speaking. And structure doesn't lie. But here's where things get even more important. Because moments like this create 2 types of participants. Those who understand what they're seeing, and those who wait to be told what it means. The first group acts early, often uncomfortably, without full confirmation. The second group acts later with more certainty but less opportunity. That gap is where outcomes are decided. History has shown this again and again. The biggest moves don't happen when everyone agrees. They happen when only a few are paying attention, when signals are visible but not yet obvious, when data is available but not yet understood. And that's exactly what this feels like. Not a single event, not a single trigger, but a convergence. Multiple signals aligning at the same time, pointing in the same direction, suggesting that something larger is unfolding beneath the surface. Now, does that mean everything continues in a straight line? No, markets don't move that way. There will be pullbacks, there will be volatility, there will be attempts to reset positioning. to shake out weak hands, to reestablish control. That's part of the process. But structural shifts don't disappear overnight. If physical demand remains strong, if premiums stay elevated, if supply constraints continue, if macro uncertainty persists, then the underlying pressure remains. And pressure, over time, leads to movement. This is why understanding matters more than reacting. Because reacting means you're always late. Understanding means you see the shift as it happens. Right now, the shift is visible, not through headlines, not through narratives, but through price, behavior, and positioning. And the question isn't whether something is happening. The question is whether you're paying attention while it's still early enough to matter. Because once everyone sees it, once it becomes obvious, once it dominates every conversation, that's when the advantage disappears. And by then, the move is already well underway.